It would be monumental in the sense that at that point, now everybody has exposure to Bitcoin.
GM, good morning. Welcome to the Milk Road Show, the daily crypto show where long-term conviction meets short-term panic. I'm your host, Jay Hamilton. It's Monday, September the 1st. Oh my God, I can't believe it's September already. Today, we are joined by Dan McDermott, co-founder of The Chart Guys, a trading-focused community that covers everything from crypto to stocks. Today, we are going to talk about Dan's market overview, how he frames the current market, where he thinks we're going in the short, medium, and long term. Bitcoin and Ethereum, we're going to look at price action, technical analysis. If you guys like charts and you want to understand where Bitcoin and Ethereum are going from a TA perspective, we're going to break that down. And we're also going to talk about one indicator that Dan really likes, a very simple indicator that he thinks could help you guys out as you navigate the rest of this cycle. Before we jump in, if you guys could just do me a quick favor, wherever you're listening, Spotify, Apple, YouTube, just smash that like button, give us a subscribe, give us a review if you're really feeling happy and you're feeling the Monday vibes. Really helps the show grow. I truly appreciate it. Thank you so much. Today's episode is brought to you by Figure Markets. Grow your cash like a bank. No lockups, just real returns. It's also brought to you by KGeN, the verified distribution protocol, changing the growth game. With that, Dan, welcome to the Milk Road Show.
Thanks for having me. Glad to be here.
Pleasure to have you, my man. Okay, let's start high level, your first time on the show, to give our audience an idea of how you approach things as an investor and a trader. How do you frame the current market? How are you thinking about where we are? Do you think about it in terms of cycles? How do you think about the way you think about allocating your dollars?
It's definitely a combination of, following price action on the charts. That's primarily my focus in terms of technical analysis. But I meld it with, sentiment and social media. That significantly changed the game in terms of markets over the last decade. So it's a combination of a number of things. And certainly we've been in a very bullish environment, led by the S&P 500 and NASDAQ. And of course, crypto comes along with that. And definitely at a point where we've seen enough euphoria, not in this moment, but, zooming out the last couple of years, seen enough euphoria that, I'm keeping an eye out for the possibility of a pullback for a couple of months or things like that to just reset. We've certainly had a wild ride over the last maybe 4 months, ever since the Trump tariff stuff brought the market down hard into the V-shaped bounce. So definitely a little bit more cautious than I've been, earlier in the year.
And okay, so I really align with that caution in the short term. Next, it feels, particularly if we talk about crypto specifically, Bitcoin and Ethereum never perform well in September. September's always been bad months for them. So, and I don't really see a short-term catalyst right now on the fundamental side. There's some catalysts on the macro side with lots of numbers dropping, and everyone's going to be looking at the rate cut decision coming later on this month. Take us a little bit further than the next few months. How do you think the rest of the year goes? Then maybe the next 12 months goes. Do you think we're in a cycle that is going to see a top at some point here? Or do you think it's just this never-ending extended cycle and we're just going to continue to grow indefinitely?
Yeah, I don't think we're in a super cycle. Every time I hear talk of a super cycle, that's always what leads to people holding through the next bear market. So, I'm going to be where we stand right now. There's space. I of course use uptrends as my guide, higher lows, higher highs. And so on the monthly time frame, there's space for a monthly higher low to be the result of a couple of months of consolidation. So it wouldn't be a major red flag in terms of, damaging the long-term uptrend structure. I am watching for, what I would call a blow off top kind of scenario where, everybody's euphoric, you're shooting up, and then that marks the top. And we've seen that a number of times along the way. Certainly 2017 into 2018, 2021 was another good example. And so I'm watching for that to potentially be an indication of a cycle top, but we would need another solid leg up in order, Bitcoin would need to be 140,000 plus. We would need ETH to be 6,000 plus if I'm going to start viewing that as a possibility. So, into the end of the year, just watching for healthy monthly consolidation to try and set a higher low and see if the longer term uptrends can continue as they have been pretty much since the 2022 bear market low.
It's interesting you bring up the blow off top, because that's what everybody in crypto is very used to, right? Crypto being a smaller asset class, growing asset class, much bigger now than it was back in 2021 and even back further to 2017. But that has been the structure of the cycles, is this blow off top. And our view right now is that we would get this in Q1, Q2, 2026. Some people are saying Q4, 2025. So some people are thinking it's sooner. And then some people even starting to talk about it extending later and going into later in 2026. I don't know if you have any thoughts on the timing of that.
For me, I'm very much what I would describe as reactionary as opposed to predictive. And so, I see things shifting on the chart in terms of just, uptrends turning into downtrends and things like that, which I then react to. Because if there's anything I've learned, this is my third major cycle. To 2017 is when I first got into crypto. It's that, it never happens the way you plan for it to, of course. And so what I have learned is it's extremely important to stay agile and not, fixated on this is the way it's going to be. And then because of the people that I've watched that do get fixated in tunnel vision, very often they'll sit through significant, 60, 80% drawdowns because we didn't get to a level that they thought we were going to get to. And again, I'm much more, I'm not going to nail the top. I'm a full-time trader, and I know I'm not going to nail the top. And so once I move beyond that, then, my game plan is more scaling out. And I'm very much a fan of partial positions where, if I sell a little bit, 110, I sell a little bit, 130, and, I'm not going to nail the top. But if you're just like we want to DCA, average into fear and bear markets, we want to do the same thing if we're averaging out.
Yeah, I want to come back to exit strategy a little bit later in the show, but first let's dive into. We've been talking about Bitcoin and Ethereum and prices that you would like to see in order to indicate that we're at that next leg up in the cycle. Let me share screen here. I know you've got some charts to look at. Let's talk Bitcoin first. What are you seeing on the charts when you look at Bitcoin?
So Bitcoin, again, let's just go to the monthly chart, as that's what I mentioned. And again, that just means every candle is 1 month of price action. And really, we just want to form the higher low compared to the last time around, which was 74.4. So, we can pull back another 20% and still form a longer term higher low. So that's the most important level for me as far as maintaining our long-term uptrend. And again, we just closed the candle for August, of course, and we're testing that low right now. So we very easily could start that monthly consolidation. And, of course, we got our $100,000 psychological level. That's the first one that bulls ideally would like to hold. But again, there aren't any major red flags for me for a little bit of a ways. So that's the wiggle room we can work with. And, as far as moving averages, we're back to the weekly chart now. This is a nice simple guide. This is the 50 period moving average on the weekly chart. And you can see we've held it multiple times on the way up over the last bunch of months. And so that can be a guide as well. And that's currently sitting at about 95, 96,000. So I would just go far as to say, if we hold this range in the 90s, no red flags. You got to see periods of consolidation and set those higher lows if you're going to continue a prolonged uptrend. And it's obviously not the fun time to be invested in something, but it's an inevitable part of the process.
It's a beautiful reminder for everybody on days like today, and weeks that I think we're, the next few weeks. It is so easy as an investor to get caught up in just one day. You open your phone, your email or whatever, and some influencer or some email suggests that, hey, this thing's dead, or, you read one thing and then you open your portfolio and you're down and you're like, is it over? And you make a snap decision. And it's so easy to forget the need to zoom out and realize that, yeah, Bitcoin could go down to 95 here. And it's just a great buying opportunity in my mind. That's not a problem. That doesn't suggest there's anything. I mean, even if we went, to me, it would be, I don't know your thoughts here, but like from a probability perspective, I would be surprised if we went below 100, but maybe I would be even more surprised if we dipped below 80. That seems right now, there's just too many buyers if we dip below 100 in my mind.
Yeah, I mean, for me, every day I'm watching all the markets, and there's definitely, if you're zoomed way out, there's not a ton of massive correlation between the Nasdaq and Bitcoin, but when you're zoomed in, very often there is. And so, for me, it would require a significant dip in the Nasdaq if we were going to see Bitcoin under 90,000. So I'm always watching everything, in relationship to each other. I love correlations. Gold and Bitcoin have had a fairly clear inverse relationship over the last few years. And that's something I've been paying attention to. And of course, right as Bitcoin is starting this consolidation, gold just broke out to end last week and is testing all-time highs again. And they've been playing leapfrog and taking turns together. But I'm always just watching, as we know, fear is contagious. And as you mentioned, we don't want to be reacting to fear. As traders and investors, that's where we make mistakes, is when we react to our emotions. So I couldn't suggest enough for everybody to literally write down your game plan with a pen and paper, stick it next to your computer, stick it wherever you need to. And it's much easier to follow that in the heat of the moment. Like, oh, fear hits me. Okay, I'm going to look down and read my game plan. And that can help prevent us from reacting to heightened emotions.
It's a great reminder. If you look at fear and greed index, and depending on which index you look at, there's a few different, versions of it, but we're somewhere around 50, right? We're somewhere in the middle. Like, we are not in greed mode yet, not even close, which is another indication that, the simplest advice is, buy in fear and sell in greed, right? But we're nowhere, we're in that middle range, which would say again that we still have more room to run in this bull market and in this bull cycle. Let's look at Bitcoin one more time. Talk to us about where you could see Bitcoin going from here, or how you would, when you mentioned earlier, you said 140 as a potential price. Where are you getting that from? What are your thoughts on where it could go next?
So yeah, again, if we set the monthly high or low above 74,000, keep that uptrend going. Honestly, that 140,000 level is just a psychological round number where, if we clear that level, for me, that's when, okay, maybe I start thinking about a game plan to take profit again. With the positions that I have, the ones that I have right now, I've been holding since 2017. And so it requires a lot of euphoria. I've sat through multiple bear markets already with them. And my mindset was, I'm looking around at my friends' grandparents who are wealthy, and okay, they buy something and hold it for 30, 40 years. So this is my version of that. And so I want to, my timeline is decades plus. And so, I'll trim a little bit in euphoria, but again, I need 150 plus from where we stand right now. We just hit the 120s, 150 plus. I start thinking about taking a little profit again. But again, it all depends on what your game plan and mindset is. So that's the next level for me. We just topped out 124s, another 20% to the upside above that would get us around the 150 mark. And again, it's, I will hold some, obviously. I'll write it to zero at this point, taking enough profit where it's risk-free positions, in the sense that if it goes to zero, I'm still coming out ahead, and let's see what it looks like in 30 years. Who knows? Any
thoughts on where it could be? We've had incredible price predictions from many people. Michael Saylor being one of them, who has predicted multi-million Bitcoin in the future. Would you align with that?
I'm open to anything. I'm also open to, quantum computers throwing a wrench in everything. I have no idea. And that's something that, as a full-time trader, I've had to really get comfortable with admitting that to myself. And, the last thing you want as a full-time trader is to have an ego that can blind you. I don't know. And, I can have my predictions, and sure, I hope it goes to 1 million. It definitely can. I won't say it won't, but in the end, I don't know. And so if I can put myself in a low risk, high reward scenario where I benefit if it does, and I'm not significantly hurt if it doesn't, that's the way I play the game.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets. The best audience to distribute your product to? Your superfans. duh. But what if you haven't found them yet? That's where KGeN comes in. They help businesses scale digital distribution at a price that makes sense. KGeN's verified distribution protocol identifies the best users for your product and connects you directly to them. Ready to find real meaningful users for your next big product? Join the KGeN network today at milkroad.com/KGeN, spelled KGEN. Let's talk quickly about strategy, MicroStrategy or strategy now. That rebranding the strategy is just the most confusing thing. Like,
I honestly, I didn't know they did. I didn't know.
You didn't even know?
No, that's news to me. So yeah, it's going to take me a while.
They're just strategy now, not MicroStrategy anymore. They're rebranded, I think, maybe 3 or 4 months ago. Big news recently. Well, we've actually already known this news was that Strategy could join the S&P 500. But the news that came out recently was that they could join as early as this Friday. What would be the impact of them joining the S&P 500? Before, I also want to get your thoughts on strategy, but first let's just talk about what it would mean if they join the S&P 500.
Yeah, I mean, obviously bullish. You look historically at names that get added and they get a big pump up, and Coinbase recently benefited from it. But it would be monumental in the sense that at that point, now everybody has exposure to Bitcoin, and that would really be a first time for that. So in that instance, that's a big hurdle that Bitcoin bulls want to see happen, just because, everybody's got their IRAs where they've got exposure to the S&P 500. So it would be, secondary exposure, but exposure nonetheless. And so that would definitely, propel it into a bit more of the spotlight as far as being meaningful to, right now it's still meaningful to a little small subset, and that has been growing over the cycles, but that would then put it on the grand stage. And so something exciting to look forward to, that possibility.
Yeah, because you're talking about the number of people that invest in the S&P 500 but don't invest in Bitcoin is going to be a very high number. And all of a sudden, the day that strategy gets included in the S&P 500, now all those people also invest in Bitcoin in an indirect fashion. And so that could have it's another big leg up and could be a big moment for Bitcoin in its history and in its adoption cycle. Let's just chat quickly about strategy. You followed strategy. What's your thoughts on strategy as an investment?
Yeah, it's the premium and discount fluctuates depending on where we are in the cycle, and I do believe the premium has topped out for this cycle, just because MicroStrategy had that monster run to 500. It was going straight up and the premium was going through the roof. And then once we hit that climax top, it's cooled off ever since then. And so, whether you have the focus shifting to Tom Lee's ETH company and things like that, taking away a bit. And, you've also got different vehicles. There were periods where if you want Bitcoin exposure, MSTR is your play, but now you got the ETFs as a factor and things like that. So I do think it's going to be less and less of a focus, but still obviously a monster in the space in its own right. And, it'll always have a space. For me, it's always just knowing, or trying to find out, where is my money best served? If we're going to see the premium eroding, then I'd rather hold a Bitcoin ETF than MSTR. But that's something I'm constantly monitoring. And one of the ways on the charts that you do that is just, you take MSTR, the ticker, and you divide it by Bitcoin. And what that price action on the chart is doing helps us track the premium and what it's doing.
Mm-hmm, mm-hmm. Yeah, it's a great take on strategy within this cycle and where it's at. You brought up Tom Lee, Ethereum Treasury companies, great lead in. Before we talk about Ethereum Treasury companies necessarily, let's just talk about Ethereum. Let me bring you bring up your chart here. What's your thoughts? Where's Ethereum at? What are you seeing right now?
So yeah, just a very different look than Bitcoin, of course. The monthly chart, which we just looked at for Bitcoin, we haven't set. We went from 1,300 straight up towards 5,000. So we pretty much went 250% straight up. And so again, if I want to be building support levels and have a nice strong uptrend, I know eventually monthly consolidation has to happen, and we just want to see that higher low and higher high. Not ready for monthly consolidation here just yet. We're still holding strong. We're trading pretty much. We got low 4,000 as support and 5,000 as resistance. Some nice round psychological numbers. And really, that's the battle that we're looking for information on into the start of September. Which level is going to break first? The relative strength, of course, for ETH has been great recently, and Tom Lee and the narrative was a big part of that. And again, as I mentioned, the impact that social media has on the game of trading and investing over the last decade, you could see it happening where, we just started to get some strength out of Ethereum, and now Tom Lee's all over CNBC. And I know that CNBC loves him. I know, he's a good speaker. And so I could just tell that, okay, this is the narrative that we needed. Everybody was giving up on ETH for so long, and he really championed the new narrative, which is, stable coins and all that. And he packaged it in a way that non-crypto people can understand. And, in that regard, he did a really good job. And of course, he's buying a ton of it. So, I've been holding ETH as well as Bitcoin since 2017. And there was a period in there where it was certainly painful and shoulda, woulda, couldas, but just going to let it do its thing. He's got his thesis. Again, price targets, I don't put a whole lot of weight into people's price targets personally. It's nice. It's nice headlines and attention grabbers. But again, for me, just keep putting in those higher lows and higher highs, and I'll keep staying bullish as long as we're in that uptrend. And again, it's that 4,000 level. You hold that, you're just fine, considering we went straight up 250%.
Yeah, I was just going to ask. So the similar, we were talking about Bitcoin levels, and there's a few levels to be watching. One is the 100K, the psychological number. Another is the 95K at the monthly moving average, and then you can come even further down to that 75K. For Ethereum, what are the resistance and the support levels that you're watching? 4,062. I just round that to 4,000. And then the next level would be 3,350. That's a pretty decent drop. So obviously it'd be ideal if we hold that 4,000. But again, no major red flags if we were to lose it. Just going to the daily chart at this point, cleaning this up a little bit. Again, we can see that we've been ranging between 4,000 and 5,000 for the last month or so, 3 weeks. And if we do break, if you're a bull, you love to see a support break with zero follow through, because that shows a significant amount of buying pressure. And we call it, a lack of acceptance under. So if you break 4,000 and you pop right back above it the next day, then that's a good sign of a bear break with no follow through, a lack of acceptance under 4,000. So that's something I'm going to be keeping an eye out for. That will tell us that the demand is still strong, but wouldn't be surprised to chop around between 4 and 5 for at least the first, we got, as you mentioned, the FOMC, certainly going to see some volatility there mid-September. So wouldn't be surprised to remain fairly range bound, at least until that potential catalyst. Mm-hmm. And you brought up earlier in the show, 6,000 as a future round number for ETH, and when you might start to think about taking profits. Where does that number come from? What are your thoughts on where we could go?
Yeah, just to, again, get 20% over the previous all-time high is just a rough gauge for me. And how we get there matters. As I mentioned, we're coming straight off that low. If we shoot straight up to 6,000 with no monthly support established, I'm more likely to take profit as opposed to getting to 6,000 after a couple months of consolidation. So that's why I don't necessarily just focus on price targets, because as a full-time trader and a technical analyst, I need to know how we got there as well. Are we extremely extended, not building any supports on the way up? Or is it a nice, slow and steady uptrend that does have those higher lows and higher highs along the way? So it's, again, reactionary versus predictive for me, and how we get to certain prices is definitely a factor in my decision making.
Let's and any final thoughts to share on Ethereum before I move us on to the next topic?
Definitely just keeping an eye on the narrative. And again, that BMNR, Tom Lee's ticker, is in a constricting range as well. I'll be curious the direction that it breaks out from that sideways range. But the ETH is in the spotlight for now. And of course, everybody's wondering, does profit rotate from there to other altcoins? Or that's what we're always watching. Where's the capital flowing?
Mm-hmm, mm-hmm. Are you invested in any of the, like in Bitminer or any of the Ethereum Treasury companies?
No, those are more traders for me. You know, it went straight up 1,000% in a week or whatever. That was a lot of fun. But yeah, I've been trading for 15 years. I started in penny stocks and I was a day trader the vast majority of my career. And so for me, the new thing is these longer term investments, and they're very minimal. I just buy SPY and Bitcoin and Ethereum in massive fear. So, the COVID dump, I buy some SPY, and the 2022 bear market, I add some SPY. And that's just, again, my trying to turn off everything that I've learned and done for 15 years as a day trader and saying, okay, again, look at all the older people, how they did it. I do want to have some positions I don't touch with multi-decade mindset. And so, yeah, for individual companies, I'm just not putting in I'm not reading balance sheets. It's just not my style.
Are those the three that fit into that longer term perspective for you? SPY, Bitcoin, and Ethereum,
and some metals. I have a little metal exposure, but yeah, that's primarily it in terms of things that I will buy and just hold. And I don't have to do research, don't have to follow earnings calls, just more zoomed out macro stuff.
Yeah, and you have that long-term conviction on. What's interesting to me is, and I might get some comments for saying this after the show, but what's interesting to me is SPY, fully agree with the long-term conviction. I mean, you look at the SPY chart over the last 25 years, and it's basically up only. Bitcoin, feel very similar. It's established its narrative as digital gold. Gold is clearly been a winner for multiple decades. So Bitcoin I can get behind too. Ethereum, look, I'm a big Ethereum holder. But Ethereum's the one that I still am not quite sure about in the decade prediction. I'm sure that blockchain is the future of finance and the future of ownership of value on the internet. And I think it's clear that right now that is Ethereum, and it'll likely be Ethereum in the long run. But I also recognize that, I mean, it's still early in blockchain adoption, and it's possible that it's Solana or another chain or a chain that doesn't even exist yet. So it's interesting to hear you have that decade-long conviction for Ethereum. We just love your thoughts on that.
Yeah, you're absolutely right on everything. Picking the tech names that would be the winners after .com, I probably wouldn't have been able to do that, and it probably wouldn't have went well. So again, honestly, just knowing that it's been number 2 for so long in terms of its focus, and again, just to, I've taken enough profits. 2017 was a life changer for me, just in terms of what crypto did and being at the right place in the right time to utilize my skill set. And so again, it's a lot of it is the fact that if it goes to zero, I'm coming out ahead, locked in enough profit from trading at ETH over the last 8 years that I'm willing to just let it ride at this point. So that is a factor. If you gave me $100,000 and said, do you want to put this into ETH right now and hold it for 10 years? That's a very different proposition. So the profit cushion is definitely a factor in the length of the leash that I'm giving this play to try and play out.
Mm-hmm. Yeah, very interesting. It's a great point, and always important to understand if you're following an influencer or show or listening to us, you have to understand when somebody bought something in order to understand the way they're approaching it within their philosophy and their decision making, because it is very easy to say that you would never sell something if you bought it, as you said, a long time ago, and have taken profits along the way. We talked a lot about achieving higher lows on a monthly basis as being a really important thing that you're watching regularly. Another pattern that you guys have been talking about recently, you wrote a great article last week, we'll link to it in the show notes, is the golden cross pattern. We've talked about this on the show. Can you explain the golden cross pattern and why, and how others use it, and why it is such a great indicator to follow?
So yeah, the golden cross, and the opposite is the death cross, but it's the 50 period moving average crossing the 200 period. So essentially a shorter term moving average crossing a longer term one. And it shows a significant shift in trend. If you've got, let's just say you've got a long-term 200 period moving average that's crossing up, and you get a death cross that tells us we've been consolidating, for a couple of months. And then once that crosses bull again to the golden cross, then that can be an indication that things are shifting. And, this is an indicator that you see it on CNBC a lot. They'll talk about the golden cross. And really it's good for people that aren't, technical traders like myself. Honestly, for me, it's a bit of a late indication because all the other things I'm looking at have already given me that information. But, their target market on CNBC is mostly investors and not technical traders. So it's a good way to bridge the gap between maybe a fundamental trader. The one thing they do look at and pay attention to is, if that golden cross or death cross is happening, to let them know, what the longer term trend shift is doing.
If we look at Bitcoin or Ethereum, has there been a golden cross pattern or a death cross pattern recently that we should be paying attention to?
No, we've seen a couple on the daily chart on the way up. So the red line here is the 50 period, the blue line's the 200 period, and the shorter term is going to be more reactive. And honestly, there's been fake outs in the sense that it crosses bear very briefly right back into bull. And so these periods of monthly consolidation are seeing, a bear cross, but if you're acting on that, it's not the right time to be acting. So as far as, Bitcoin is concerned, I would need to be zoomed out, maybe the weekly time frame. If we were to see a significant bear cross, we crossed bull back at the end of 2023. So we're now almost 2 years post golden cross. And again, that's not going to change anytime soon. We would have to be pulling back a significant amount for that to come back into play. So honestly, as I mentioned earlier, I'd be using the 50 period weekly moving average as a nice support guide. And the crosses aren't really relevant with where we stand here and now.
Okay, great. So everybody can use the golden cross or the death cross in your analysis. Keep an eye out for those. I mean, I think every time it happens in Bitcoin, every YouTuber and podcaster is talking about it because it is such a nice pattern to look at. Let's talk briefly before we let you go about exit strategy and exit plan. For our audience, the key is to not round trip as if we go into another bear cycle. And I say if, I should say when we go into another bear cycle would be a more accurate thing to say. How do you think about exiting and taking profit, and any tips or tricks that you can share with our audience in terms of the way they should approach that?
Yeah. So as I mentioned, I used to be all or nothing in the sense that, I'm either in my position or I'm out of my position. And then over time, I realized I am not going to nail tops and bottoms, and I shouldn't put that expectation on myself. And so it's a mind game, as are so many things with trading and investing. But let's just say, rough example, I break up my position into thirds. And, if I sell a third at 110,000 and we keep running, my mindset can then be, oh, why did I sell? I'm such an idiot. I could have had this much money. Or you can have the mindset, oh, my net worth is still going up. That's great. I've got cash if we see a big dump. And so that honestly is something that we can help shape our thought process as to whether we're getting down on ourselves and in a negative spot or, in a positive spot. And I would certainly say it's best to stay as positive as we can. And so again, my style, I have sold significant positions into the prior two bull runs, 2017, 2021, and I never came close to nailing the top. It was selling a little here, little here, little here. And the other aspect is having multiple game plans. I've got friends that aren't technical traders, and last cycle, they're 100,000. I'm going to start taking profit. Okay, well, we didn't hit 100,000 and they didn't have another game plan. And so they round tripped and held the entire bear market. And so you've got to have an ideal scenario game plan. If it gets up to here, I'll start taking some profit. But you also need the opposite where, okay, what if what I think is going to happen doesn't happen? Where to the downside would I start, maybe taking some position off because things aren't doing what I expected them to. So just to summarize, I'd say breaking your position up into multiple positions that you are scaling in and out of, and having multiple game plans, ideal best case scenario and worst case scenario. And, trying, again, writing them down and doing your best to not be swayed by the significant emotions that we get with big price swings.
Yeah, it's fantastic advice that If you have not written it down, write it down now, because now is a much easier time. I mean, no time's an easy time to write this stuff down. There's always going to be something happening that day or that week that's influencing you, whether it be something in markets or whether it be something in your personal life or your personal finances. But it's definitely easier to write that down now than it is during the euphoric stage of the bull run, which, as you and I have both said, it really has not happened yet. That is still to come. Dan, absolute pleasure to get you on the show today. Thanks so much for joining us.
Glad to be here. Thanks.
Thanks so much for listening in, everybody. I've got to remind you, as always, none of today's episode is financial advice. I'm not your financial advisor. Dan is not your financial advisor. None of this episode is meant to be seen as investment advice. If you want investment advice, you should speak to a professional. This episode is for educational, informational purposes only. And one more time, you're still listening. I love you. Thank you for sticking around to the end of the show. Please give me a like or a subscribe wherever you're listening. It really, really helps the show, and make sure that as more people come into crypto, which they will be coming in over the next year, that they come in a safe way and hopefully don't get wrecked and rage quit. So thanks for listening in, folks. We'll see you back again tomorrow. Have a wicked awesome day. If y'all are making swaps or trades right now, highly recommend you check out Milk Road Swap. This is a DEX that we built in partnership with Cow Protocol. Why did we build it? Not to make money, just honestly so we could have a place to do our swaps for the lowest fees that we could find. This is the fees on Ethereum, Arbitrum, and Base are only 0.15% fees. This is a huge difference from other centralized exchanges that charge 0.5% or even up to 1.2% fees on their swaps. Also, you can swap on Solana, all at swap.milkroad.com. Check it out today. You won't be upset. And you can join me in my favorite place to make swaps on chain. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.